Well, good morning, everyone. Thank you very much for joining me. My name is Alan Richard. I'm the managing broker at Max One Realty and Realtor Partners. And this is our weekly real estate backstory, kind of where we expose the soft underbelly of the real estate world every week. So every Monday morning at 9 a.m., I kind of do a wrap up of news, events, things happening. Normally, Ming is with me, my business partner and wife. But today you're just stuck with the old man. So we're just going to kind of jump right in here. So as far as like any kind of upcoming CE classes we have this week, so you can catch all these at mx1training.com. So on Tuesday, we're going to have our accountability as usual, but also before that, 9:30 is the 2021 GAR contract dissection by Dana Sparks. Also on Tuesday at 10 is going to be the ultimate buyer system, and that's by Lynn and Marcy. Wednesday, we have contract offer and acceptance, Contracts 101, and that is by our very own Keisha Kennedy. And I highly recommend that you jump into that. Also, and then that's pretty much what we're wrapping up. This is a big, Thursday's April Fool's, Friday's Good Friday, and then Sunday is Easter. So I hope everyone has a very nice Easter week coming up, the whole 9 yards there. So I wanted to kind of jump right into what's going on with mortgage rates, because we are seeing a real movement of those. So, the Fed came out this past week and said that they expect to keep their rate near zero through 2023. And that's really good news for us, kind of thing. The longer that they keep these rates at this point, the stronger our market is right now, and it's continuing to drive business for us, kind of thing. The Fed also said that they're going to continue to buy $120 billion in bonds, which helps because as they buy those bonds, that really helps keep the 10-year Treasury down, because, prior to this, we saw an uptick in the 10-year Treasury note prior to the Fed's releasing their data and their information, kind of thing. And so we've continued to see the 10-year Treasury going up a little bit. Overall, the markets are responding very well. It's looking really good, but that is not necessarily exactly the same when it comes to the mortgage rates. So we're seeing mortgage rates that have jumped up again. So our mortgage rates jumped up last week. They were at 3.09, and this week they're at 3.17. So, fairly significant jump, almost a tenth of a point in a week. We're seeing more and more pressure on the rates to continue to move up, and we really feel that the interest rates are probably going to level out somewhere around 3.5, somewhere at that point throughout most of this year. It's going to continue to keep moving up. And so we do encourage you to have your buyers lock in rates. But here's the caveat: you can't lock in a rate without a property. You have to have a property to lock in a rate. So, that kind of poses the next question of, we got to have a property. And then we are going to talk a little bit more about jumping into, what are some things that we can do here in just a minute. So we'll get into that in just a bit. But overall, the 30-year is still at 3.17. Yes, it seems when we've been talking at a 2.6 and a 2.7% rate, 3.17 sounds high. But let's make sure that we're keeping our heads on about this whole thing. 3.17 is an amazing rate. I mean, hands down, it is a phenomenal rate. A 15-year fix is only at 2.45. So you can see that historically where our rates are now, nothing close to where we've been. Now, anytime there's an uptick in rates, what happens to applications? So applications are down 2.5%, but that is total applications. And of that, the biggest piece of that is that refinances went down. Overall, purchase applications, even though the interest rates went up, purchase applications actually went 3% up week over week. Now, when you look at that number, how it's compared to year over year, it is nowhere close, kind of thing. So we still have way more demand than we have supply to meet out there right now. So last week, our jobless claims came in pretty, actually looking pretty good, to be real honest with you. Initial claims came in at its lowest mark in a year, kind of thing, which is, kind of shows that the economy really is continuing to improve. But that is, whoops, sorry about the noise. Try that again. Um, so we are seeing improvement there, and it's great to see that the unemployment continues to come down. We want to continue to see that happen. Uh, Probably what you're going to see in the news here is that existing home sales went down 6.6% in February. That's going to be the big headlines. Everybody's like, home sales dropped, home sales declined. And if you look, like here's a graph you'll see where it shows, 6.6% new home sales are down, existing home sales are down 18.2. And so, this kind of fuels the fear of the market's going to crash. And we're going to talk a lot about that today, just to kind of ease your mind and talk about what the numbers really are, because you got to understand that there was a lot of things going on. We had a lot of weather issues. Our builders were having a hard time in February with inventory, and again, partly because of inventory, but also because of availability of supplies, pricing, the whole nine yards. Even availability of lots have affected our builders a lot in there. But if you really start breaking down the data, you can't just go off a knee-jerk reaction, because when you look at 36% of the homes sold above list price in February, that's the highest number ever. All right, so 36% of all homes sold above asking. Okay, and you can kind of see on this graph here that how we've been comparing to homes sold over list price. And so we're at our highest number pretty much ever, kind of thing. So it really has been pretty significant on what we're seeing out there in pricing. And we're going to talk a little bit more about bidding wars and that kind of thing. How about our decline in homes for sale? We also hit a record low. So see, when you say, home sales down in February, okay, we had less listings available in February than we have ever. Okay, nationally, we have less than 1 million homes for sale, and that's pretty much the lowest that we've ever been since they started tracking, even back to World War II kind of thing. We have less homes for sale right now. We are at a severe deficit of homes. So of course, when you have less homes for sale, there's less houses to sell. Our numbers versus last year are going to look down. That doesn't mean that the real estate market is slowing. It doesn't mean that at all. Do not get tied up in those headlines. So new listings are down 16% from 2020 in February. That's more of what we were just talking about. The number of listings we have is not in good shape. We need more listings. Time on market at the same time is down 23 days from 2020, not 23 days total. It is down 23 days. It's almost half of really where it is, kind of thing. And then lastly, the average right now on a listed property is 4 offers received. That's the average. That's the highest. That's the highest number ever. 4.1 offers is the average for every listed property in the MLS right now. And you can kind of see going back all the way to 2015. I'm sorry, 2010. No, 2015. Sorry, going back 2010, you can see that nothing is even close to that. So what do we do about that? How can we compete with that kind of thing? Well, I want to talk a little bit about bidding wars real quick, because, and first, let's just keep our heads kind of screwed on a little bit. So first thing is that inventory is coming. All right. We know that there's a lot of things going on that will provide us with a lot more inventory coming on. One of those is that the vaccines really are pouring out. And as more and more people feel more comfortable with those vaccines, we're going to see more people opening their homes up to sell. The second is that homeowners right now are looking to cash in. This is if you've been sitting on your home for a number of years, even if you haven't, I mean, right now I know so many sellers that are looking to cash in. Now's a really good time to sell your home, kind of thing. At the same time, yes, our builders took a hit in February. Speak to the builders out there. There's not a builder out there that is not ramping their business up to blow up. We've got dirt movers going on everywhere. We have new construction happening everywhere, kind of thing. So, our builders really are ramping up inventory right now. And then lastly is that our rates are continuing to go up. And anytime that the rates go up, there is a rush to get more, or to get those houses under contract. So having those rates kind of going up is not necessarily a bad thing. We need that, the health of the thing, but health of the market. But at 3.5%, we're still historically low. And that's pretty much where I think we'll end up being out for the rest of the year. So we're seeing a lot of bidding wars out there. And then when you have these bidding wars, first of all, we have to make sure that well, let's talk about how to win the bidding wars, okay? So the first thing is that you have to set your expectations really early. Set your expectations with your buyers to let them know that on the majority of properties right now, I mean, on all properties, it's averaging 4 offers per property. And on really good price properties, we're seeing 20, 30. I saw one listing that had 90 something offers on it, which is a bit crazy. Yes, I know. But we're all seeing that. If you don't prepare your buyers for what they're going into, you're just shooting yourself in the foot. We need to be really, really clear about what's going on in our market. And that starts with setting expectations with your buyers from the beginning. Okay. There isn't a, let's try 20,000 under asking out there. We need to have those conversations with our buyers. There's not I'm going to push for terms. I'm going to push for this. They're just going to go take another offer. And so we need to make sure that our buyers are understanding what's going on in the market, and we need to prepare them for what's really going on out there. So set those expectations and set them early and maintain them. The next thing one of the biggies, in my opinion, for how you can win bidding wars is that you need to ramp up your communication. Okay, so we need to be overly communicating, and you have to sell yourself with the listing agent. Relationships, just like everything we do in real estate, relationships really, really are the key. So communicate with the listing agent kindly, okay? I can't tell you how many times we just get very short, curt answers from buyer's agents, and they miss the opportunity to really build some relationships and to glean and to share information either way. So communicate with the listing agent and be very clear about what's going on, and also be really pleasant. I like to work with nice people, and I don't like to work with jerks. And so if you call me and you're a jerk and I get to choose between you and somebody else, and I get to tell my seller which one's a jerk, are you really helping yourself, kind of thing. So also you want to make sure that you are trying to sell yourself with that listing agent. My clients are amazing because they ABC, because they do this and this and this, they're ready to go. Also, my team, we specialize on getting deals done. We're here to close deals with you. Letting the listing agent know that you're really eager to work with them is a really solid strategy, kind of thing. Because I like to work with people that like to work with me. We also like to let listing agents know, we use non-alarming inspectors. Our inspectors are not here to kill deals. Our inspectors are here to make sure that we have to know what's going on. We want our clients to be prepared. But some inspectors out there, they're more worried about covering their tail and having all these, like this, I've seen where a licensed, bonded, and insured professional licensed contractor must repair a missing downspout elbow. And that doesn't make any sense. So we work with non-alarming inspectors. We partner with lenders who get deals done. Our lenders go to close. Our lenders are local lenders. They're people that we can call. I also, anytime we have offers, we ask our lenders to call the listing agents to talk about the strength of our lender with them also. Lastly, do your homework. Reach out. When you reach out to that listing agent, kind of thing, remember that terms wins contracts, especially in this day and age. The terms will win you the contract. So, when you're talking to the listing agent, listen, we would love to work with you on this. Can you help me understand what's driving your seller? Do the sellers need to move immediately? Would the sellers like to stay for 6 months? What are your sellers' motivation? You'd be amazed how many times just taking a little bit of getting a little bit of information and including that in your offer, makes night and day. If it's a seller that needs to move right away and your buyer can, being able to put that information out there on the contract, or if your buyer can wait. We've seen up to 6 months, rent backs and that kind of thing, which is a bit extreme, granted, but to see 30, 60, 90 days is not that uncommon right now. Next thing is that financing pre-approval is non-negotiable. Okay, the buyers have to be not that crappy little piece of paper pre-approval. They need to be through underwriting. They need to be ready to roll, because if they're not, it's going to hurt your deal, kind of thing. Because the other thing is that we have to be prepared to discuss terms, and the number one term that we're going to have to discuss is always price. What's going on with the pricing of these listings. We are seeing so many, as you can see, 36% of all listings are going over ask. We have to prepare the seller for that. And so we have to be prepared to discuss where, how far over asking is our sellers, are our buyers prepared to go? That's a very important question that we need to be ready to handle and have an open and honest discussion with them about. We need very clean contracts. If you muddy up a contract and you put in 700 different things before the inspection's even been done, that hurts your chances a lot. You need to be prepared for very short due diligence periods. You want to, if you need to have really good home inspector partners. And if you need them, please let me know, and I'll share the ones that we use. But you need to have good partners that are going to respond to your and your clients' needs quickly, so that we can get a shorter due diligence period. And then be prepared for short financing contingencies. If we can shorten those financing contingencies because our buyer is already through pre-approval, that's one other thing that helps our offers look really, really good. And then, the other biggie that we're seeing right now is either waiving appraisal contingencies or appraisal guarantee amounts. We're seeing where, from $5,000 to $30,000 over appraisal amount up to this amount, the buyer will pay up to, $30,000 over appraisal amount if it appraises under list price, kind of thing. So we're seeing all those kind of guarantees. But again, that's another strategy. You have to have those conversations with your buyer on the front end, because some of your buyers are able to bring that kind of money. They're going to have to bring that money to closing with them. Some of them will have it and it'll be worthwhile for them, and some of them won't. But you need to have those conversations up front with them. Wrapping up, we need larger earnest money amounts. I can tell you from being listing agents for years, bigger earnest money amounts is a more serious seller, more serious buyer. When we sit down and present offers to our clients, and this one has $1,000, this one has $1,000, this one has $1,000, this one has $5,000 earnest money, even though they're going to have to bring that to closing anyway, it just looks a lot better on paper. Let's see. Next thing, always ask for highest and best deadlines and make sure you hit them. Because the way it's going right now, if it's, well, I'll just get it into there tomorrow, the deadline is today at 5 o'clock, well, guess what? It's gone by then, kind of thing. You have to know what the deadlines are. When you communicate with a listing agent, make sure that you find out when those deadlines are for the highest and best. Probably the last thing I really want to touch on is that be prepared to write a backup contract. In the past, so many agents would just be like, backup, forget that, I'm not doing that mess. Backup contracts are something we're seeing much more utilized right now, kind of thing, because one, it really strengthens that seller's position to be able to have a backup offer on what they're willing to negotiate with. And sometimes you'll see where a buyer will come in and they'll have all these great terms, and then they turn around and they ask for everything after, once they do the inspection. And if the seller has a really solid backup ready to roll, they'll just say no and let them terminate and then immediately switch over. So be prepared. This is another thing you need to explain to your buyer clients, that a backup contract is not always a bad thing, kind of thing. So be prepared and take advantage of writing backup contract offers. Now, I know that probably one of the big things that everyone's going to say is that, well, the listing agents don't answer our phones, right? I hear that. I've heard that for forever. The majority of your listing agents do answer your phones. Sometimes they are getting hammered right now. So again, pleasantness, kindness, working with them. I actually know the agent that got 97 offers on their last listing, and just the administrative nightmare of having 97 offers, 97 agents calling, hey, did you get this? 97 loan officers. So be understanding about what they're going through as well, and don't call them all bent out of shape, or they're just going to blow you off. All right. So, one thing that we're hearing right now is, hey, how's the real estate market? Is it going to crash? Are we in a bubble? Should I wait to buy? And honestly, no, we really shouldn't. But it helps if we actually show the data. And so what I'm showing you here is this is from NAR. And this shows that where we are on inventory. Because if you look at the current new and existing homes for sale versus the estimate of the required number of homes that we need for sale, we are short 2.7 million new and existing listings in order to meet a 6-month demand. Okay, so that means that we need to build 3 million houses almost right now. Now, this is going to take us a little bit of time to build up. Residential real estate is highly tied to supply versus demand. We have way more demand than we have supply to match it. And this is where we're actually starting to see the numbers where we're down almost 2.7 or not almost 2.7 million homes that we need to be on the market just to sell what we have. Now, there's no way that we're going to wave a magic wand and put 3 million listings back on the market. And by the way, that just puts us at a flat market. That just puts us at 6 months of standing inventory. That's not even moving into any kind of great terms as far as all that goes, but that's just to get us to where we really need to go. At the same time, we also have a backlog of 3.2 million family and multifamily new housing units. What this graph shows you is how many houses, the cumulative shortage or surplus of housing as it's gone over the past, 20, 30 years kind of thing. And you can see that for the last 7 years, we've had a pretty massive deficit in the number of houses that we've added versus the need. So we are running on a 7-year backlog of housing. So this is nothing that's going to get wrapped up right away. Please don't think, and please don't be telling your clients that, you know what, boy, that market's going to crash. That market's going down. This is a bubble. It is not. We have way too much demand and way not enough supply. At the same time, we also have the millennials, who are our largest buying segment, moving into the home buyer market. Not even moving into, but you understand that the average millennial first-time buyer age is 33. However, our average millennial age is 28. Over the next 5 years, the largest group of millennials are moving into first-time buyer age at the same time as we have historically low inventory levels, and we have a massive deficit. So we need to be building a lot more houses than we've been building already. So as you're talking to your clients, as you're out there, interacting and going through, make sure that you're explaining that this is not a bubble. We're not, there's not going to be this big crash coming around. It's not happening. Okay. All right, so let's talk, how about the rental market? How's that going? Well, here in Atlanta, the rental market's not great. And so new data released from NAR shows that overall, the average rental in Atlanta is $1,430, and that is up 4% over last year. So, rental market is just as tough. I'm going to say it's tougher, but it's just as tough as the residential housing market is at the same time. Here in Atlanta, there's some large cities that where rentals have gone down simply because a lot of folks are leaving the cities. But in Atlanta, we're up 4% over last year. And so the rental market continues to be really tough for our renters. More talk on the street. This is all about real estate trends. So the PRO Act was passed by the House, and President Biden says that he will approve the PRO Act. NAR is not as worried about the PRO Act as I think some of us. And basically with the PRO Act, it eliminates independent contractor status for realtors nationwide. And so The NAR really does feel that they're going to be able to get a carve out for realtors and for the real estate professionals overall. Otherwise, all real estate professionals will have to go and be incorporated, which is not a really huge deal, but it is a little bit, there's a little bit of money, it's some time consuming, and there's some additional paperwork and filing. So all we're really doing is just adding more expense in there more than anything. So I'm hopeful that will not happen. But if you do see stuff going on about the PRO Act, it does have the potential to upend our entire industry and really make things a lot more difficult. On the commercial real estate, we are seeing a real improvement on the commercial front right now. Most of the CEOs of all these big, large real estate and these REITs and large real estate holding companies really feel that vaccinations are the key to returning to the office. We're seeing already where there's a big shift to a 3-2 work week kind of thing, 3 days in, 2 days out, or 2 days in, 3 days out. And we're seeing that transition back to there. Nearly 80% of CEOs want their employees back in the office. I know there's a lot of folks that feel that teleworking is going to be here forever. And for some industries, it really is. But we're seeing that most of the CEOs for the vast majority of the Fortune 500 companies really are looking to see it go back into a much more normal place, get back to a normal feeling on that kind of thing. So as such, we're starting to see commercial real estate doing well. So next, what I'd like to wrap up with is our, last week, I went over the generational home trends and the characteristics of buyers. And so this week I'd like to kind of go over with you guys the trend of the characteristics for our homes purchase. So we talked about buyers last week, and if you missed it, you can catch out the backstory. You can also pull this data from the National Association of Realtors. This data is available on their website as well, but I'm just going to go over the highlights and the things that really stuck out to me. So first thing is that, when you look at the location of the homes purchase, out there in suburb land, that definitely equates for the largest percentage. But then you're also going to see, and one thing that there's been a pretty drastic shift with COVID is the shift into small towns. And so we're seeing where there's a massive exodus into small towns, both from the suburbs as well as from the cities. That has really moved out. Now, as far as the urban and the city areas, what you see is that for the large portion, it's the millennials that are driving in-town purchases kind of thing. The extreme rural is also up big, but it tends to be up big more with our Gen Xers and our boomers than anybody else. So I thought that was very interesting to share. The other thing is that how far are we moving? Because, you'll hear a lot about people are moving, from the cities out to, far out. No, the average move for everyone in the United States is 15 miles. Here in Georgia, the average distance moved is 14 miles. You can see that our millennials and our Gen Xers move less, and our boomers and our, retirees, they are moving more, but they move farther because they're moving to be closer to family is normally the big kicker there. But here in Georgia, average move is 14 miles. What factors influence your neighborhood choice? And so for all buyer groups, whether millennial, Gen Xers, whatever, the overall quality of the neighborhood. Now, you can't put a specific value on how you rate quality of the neighborhood. It's just when you drive through the neighborhood, is it clean? Is it maintained? Is it good pride of ownership? That kind of stuff. Does it, is there a bunch of rundown homes? Does it look really good? That kind of stuff. Other than that, how convenient is it to the job? What kind of travel and how does that look? Affordability is actually the third item down on the list kind of thing. One thing that you will notice it's a little that has dropped for the last 5 years is the quality of school district. Quality of school districts has been continuing to decline. And we've seen that largely because our buyers are kind of going to where the builders have been building. And for years, the builders, especially for the last 4 or 5 years, our builders have been building in those neighborhoods that had inventory. We've been using up those PVC farms for years now. And so it's one of those, if you build it, they will come, and we've seen that. Now, for the folks who really do care about the quality of the school district, you'll see that overall, the 31 to 40 age group, those are the folks. I mean, why is that important to them? Because they've got the kids. They've got those are the folks who have the kids in schools, kind of thing. So the millennials also care, but it's those Gen Xers and our older millennials that are really driving where the schools really matter. Next thing is how much, what is the average price point? So for our millennials, for our younger millennials, it's around $229,000. For older millennials and Gen Xers, it's right around $300,000. Our boomers, it's actually a little bit less because we're seeing our boomers downsize a little bit, which is actually pleasant to see, kind of thing. And then even all the way up to our retirees, it continues to drop a little bit. Next one is one of those where you get to read into it a little bit, and that's characteristics of the home in which the buyer compromised. What did our buyers give in on? And the number one thing that we're continuing to see, especially right now, price. That no one wants to pay the prices on some of these things that we're seeing. Yes, the interest rates help with that kind of stuff, but the number one compromise is that our buyers are spending more. They're giving up on the price of the home. The second one is they're giving up on the condition of the home. For years, well, for forever, it's been price versus condition. But those also tend to be the two things that across all of our buyer groups, price and condition are the two first things that we will compromise on. After that, size of home, style of home, lot size. You can see that again, schools ranked really far down, kind of thing. Which is actually good because that shows that they're not willing to compromise on the school. So the other really interesting thing is that 30% of our buyers didn't make any compromise at all. They're going to buy what they want to buy, or else they're not going to get it, kind of thing. So you still will have those folks who won't compromise on price, who won't, and the biggest thing there is to prepare them for what they're going into. So I hope today was helpful. I hope that you got a lot out of it today. If you need some me time, I always jump back on I do a little live Zoom session. If you want to sit and chat with me, you got any questions, max1.rock/chat, and you can ask me anything. Call, text, smoke signals. I answer it all. So I hope you guys have a great week. I hope this was helpful to you, and please get out there and have a great week. Thank y'all. Bye now.